Hi guys, this is Devang Mashwari from equialpha.com. Welcome to today's technical analysis masterclass, and I want you all to take a copy and a pen and to remove all the noises around, all the other tabs that are open right now of Netflix, Prime and everything, and just focus on to this video. This video will be a long one because in this masterclass we'll cover a lot of things that can seriously impact up your thinking and can change your approach from a losing approach to a winning approach into stock markets. So listen to the entire masterclass very carefully and please take down notes wherever you feel there is something new. As I said, the video will be a long video. Therefore, first of all, let me tell you what's in it for you. Why should you give up your precious time to see up the video? So in this video, we'll discuss primarily four things. The first is what is technical analysis. Though this sounds very basic, but basics and foundations are always to be solid. In this, we'll also compare about different fundamental and technical parts and why and what are the benefits of technical analysis, how the psychology got derived upon. In the second part, we'll discuss upon supply and demand analysis. In technical analysis, it's all about understanding supply points, all about understanding demand points. So we'll understand a lot about charts, candles, bars, moving averages, weekly charts, monthly charts, and see all the indicators that you hear here and there. And let me tell you, after the second point, you'll have a lot of knowledge about charts. The third point is what are trends. You might have been hearing here and there that market is uptrending, market is in downtrend, this stock is going up, this stock is going down. How to identify it, that whether it's trending upwards or trending downwards or it's trending in no direction, that's in sideways. So we'll look on to that part, that how to identify a trend, how to identify whether a stock is in uptrend, downtrend, and where you need to be into that stock, because that's very crucial. In the fourth part, we'll understand about the fundamental stories behind every stock chart. Now, each stock has some stories. Okay, as we'll go through three parts, we'll understand that each stock has a story and how to read up those stories just by looking up the chart. That's a skill worth listening for. So, without wasting any time, let us start upon. In stock markets, there are basically two ways to make money. The first one is fundamental analysis and the second one is technical analysis. The first one, the fundamental analysis, says that I need to buy undervalued companies and sell them when they are overvalued. Pretty simple, right? The second one says that I buy stock direction. If the stock is going up, I'll buy that, and if the stock is going down, I'll sell that. Now, before going to that part into details, let me ask you a question first. What do you think is the total number of participants into stock markets in India? How many demat accounts are there? To be simple, let me ask you directly, how many demat accounts are there in India? There are 4 crore demat account holders in India, and out of that 4 crore, 75% of that is active accounts. That means that around 3 crore people trade into stock markets, or around to 3 crore people. Some people may have 2 demat accounts, so you can take it as an approximation, but yeah, that's the figure. Though this 3 crore looks very less when you compare to the entire population of 140 crore, but yeah, there is many. So there are many people like foreign institutional investors, domestic institutional investors, mutual funds, retail investors, various experts, brokerages, this, that, and n number of people who are actually participating into stock markets. Now, what they do into stock markets? What are they doing into stock markets? So they all have some perspective regarding stock markets, right? For example, one person might be thinking that the MRF share at 65,000 rupees around is undervalued. So what he'll do? He'll put a buy order that he wants to buy up that share. On the contrary, there can be a person who thinks that no, MRF at 65,000 is highly overvalued. And what he'll be doing? He'll put a sell order because he will be now selling up his stocks. So he will put a sell order, the other person will put a buy order, and if these two price gets matched upon, that's called as a trade. and the price at which this happens is called last traded price. For example, in this case, if he puts an order of buy at 65,000 and the seller also puts an order of 65,000, they both get matched up on, that's the last traded price. This last traded price is only called as market price. So market price of any share is last traded price of it. Got it? Now in this example, we took only one person, but understand, out of those crores of people, at every second, someone is thinking about a stock in some or the other manner. Someone is buying up, someone is selling up, somebody is acting on some news, somebody is acting on some another news, and there are perspectives and opinions going around all the time, at every second. So whatever analysis a person is doing, at the end he puts in order to either buy or either sell. That's like conclusive, right? Don't have any questions with regard to it. Because if somebody is analyzing up something, there can be only two things. Either he likes it or either he dislikes it. If he likes, he'll buy. If he doesn't like it, he'll put a sell order. Now, why I'm telling you that? Why I'm telling you that there are a lot of people doing that? Because technical analysis is understanding up those people, the psychology of the entire market. That's technical analysis. You understand basically two things into it: demand and supply. Whether the demand is more or whether the supply is more, and you act whichever force is more prevalent. So if sellers are more powerful, a technical analyst will never buy a stock, he'll sell a stock. And if the buyers are more powerful, he will buy a stock. Fundamental analysis is a way in which you understand the business, you understand the promoters, the management, what are the products of the company, how company is growing upon, what's the sales, what's the profit, and all those things. But once you decide, at the end you put an order. So a technical analyst says that I don't need to understand all those things because I will understand the outcome. Okay, he'll understand the outcome, whether people are buying, overall the mass people are buying, or in entirely sellers are more prevalent. You got my point? So a technical analyst doesn't have his own opinion. Understand, this point is very critical. A technical analyst never has his own opinion. He basically acts on the opinion of the mass people. Whatever the mass people are saying, whoever is more prevalent, he just goes with him. He doesn't have his own opinion about whether this business is good or bad. If the people are thinking that the business is good, see, no business is good or bad. It's about the perspective, the person who is analyzing of that business. So if the person who are analyzing the business, majority thinks that this business is good, they'll put a buy order and demand will be more than supply. So if demand is more than the supply, what will happen? The price will move up. That happens with everything around. If the demand is greater than supply, same things happen with stocks also. If the demand is more, the price will move up. So technical analysts will now conclude that since the price is moving up, the company is good. And on the contrary, if he thinks that the price is falling, that is supply is more than demand, then the company is not good. Now, how does this happen? Let me tell you. For example, there is an information that came about XYZ company. Okay, there is a new information that just came into the news, and a technical analyst is now looking at whether the information is good or bad. So he will not go and analyze up the news. Okay, he will not go and see, okay, what will be the impact of this news, what will happen to the company's performance, what will happen to the competitors. He will not go into those details. Okay, those details are left for all the people to conclude upon. That whatever they are concluding, I'll adjust my opinion based on that. So if majority of the people think that information is bad and that information is having an adverse effect on the business of company, then they will sell up the stock. And if they will sell up the stock, the price will fall because now the supply will be more than demand. And the technical analyst will just react onto it. As he sees that, okay, this news came and after this news, the price has fallen. He will conclude that the information that came is bad. You got my point? He doesn't have his own opinion. He just follows up what the mass psychology is saying, what the mass people are doing. A technical analyst just follows it. If the information would have been good, that the majority of the people think that the information will have positive effect on the business, that the company's sales will grow or the company's new geographical expansion will be very good, then they'll buy up shares. There is one part of analyzing and one part of executing. A technical analyst have no clue and he doesn't want to even get into analyzing. He just want to understand the execution part. Understand the execution and psychology of buyers and sellers. That's all technical analysis is about. If the price moves up, it's good. If the price is falling, it's bad. When I say mass psychology or what our mass people are doing, this is also called as market's opinion. So a technical analyst will follow market's opinion. He will never question it. A technical analyst says this. Write this down and never forget this. Price is God. Price is God, and never argue with God. The kids doesn't argue with God. So you don't need to argue up with God. And the fundamental analyst, on the contrary, have a complete different level. He'll say that no, people are very poor in analyzing up things. People doesn't know things about. They are very irrational. This news is good. Why are they selling? They should not sell this. So a fundamental analyst will say that markets are irrational. Market doesn't know anything. The mass people doesn't know anything. I will lead the market. I will lead the market and you all are simply stupid. However, a technical analyst doesn't goes with that. His objective is to not to fight upon this is good, this is bad, this is good, this is bad. His objective is to be with the person or be with the side who's winning. So if the buyers are winning, a technical analysis says that you be with buyers. If the sellers are winning, a technical analysis says that be with the sellers. You be with them. You can take up this as a kind of very different thing that happens apart from our usual life. So in usual life, we want to contradict things and we want to have our own analysis of what we think, but technical analysis doesn't work like that. It's understanding and working as per that mass psychology. Now, what is trading? Okay, technical analysis is okay. Now we understood what is technical analysis. We understood that it's understanding of the supply and demand and how they together, supply and demand, is shaping up the prices. Got it? That is technical analysis. Now, what is trading? Trading in simple terms is a pattern recognition game. Now, what is pattern recognition game? As you now know that there are various participants in the market and together they move up the prices. Whoever is winning, it moves into that side, right? Over the period, this human behavior creates price patterns. Now, why price patterns gets up? Because human behavior is same. From the last 100-200 years, today also and for the next 200 years also, human behavior will remain same. Fear, greed, regret, all these feelings, human feelings that makes a person to act, to buy, to sell is same. And when this human behavior repeats upon, you will see price patterns. Now, what are these price patterns? We'll look onto it into the second part, but currently understand that trading is a pattern recognition number game in which you first objectively identify the pattern, second define your risk, and third you define your position size, that how much percentage of capital I need to put into the stock. And once you decide up these three things, you finally pull the trigger by buying the stock. So that was about market behavior, human behavior, technical analysis, why it is same, and probably it is a very cool method. Sometimes I find this method, technical analysis, very good, and I also do that. At the end of this video, you will understand that what I do. Okay, so just stay with me through the entire video now. Now we'll move to the second part. The second part tells us that how to analyze of that demand and supply. So we first understood that it is a demand and supply game which is actually shaping up the prices, but how to see that, how to interpret that. For interpreting demand and supply, for analyzing of demand and supply, we look upon onto charts. Just like in fundamental analysis, you go through all the annual reports, balance sheet, P&L. In technical analysis, you go through charts. Charts are your navigation tool. Navigation tool to understand about the company. So now let's go to some practical examples and let's take up some stock charts for understanding this more deeper. I hope you're taking notes in between because that's very essential. Okay. Now we'll go through some charts so that you can get a very good understanding about how to read and how to do demand and supply analysis. Okay. So for that you can open up this website tradingview.com. This is a very good website and it's absolutely free. Which stock should we take? Okay, let us take MRF because we talked about it. So type the name up here, click on the name of the share. Then you can see a full featured chart. You need to click onto this. Then it will open into full page. Let me tell you about charts first. Okay, because I can understand if you are seeing this screen for the first time or you don't have much knowledge about this screen, that you will be now thinking that what is this? With some lines going up and down, what to do with them? Okay, when I started up 6 years back, it was the same with me. Okay, it was completely same with me that, oh, what are they? What do people look into it? And these are just some movements happening and the green candle and this is some red candle. What's the actual use of it? And at some point I was also thinking that, okay, these people are like stupid. They don't know and they just keep on drawing some lines here and there and then think that profit will come. Stock market and India is so backward. So that was when I started upon, I used to think that. And if you don't know much about it, you would be thinking the same right now that what is this? So let us first understand what is a chart. Each candle, if you can see upon here, a candle, it's basically tells you about price movement. Okay. One candle tells you about price movement. So if you look onto this candle, this is basically telling you the price movement for the day. Okay. Price movement for the day. Now, when price movement for each day is plotted upon you can say on a blank sheet, if you plot upon the price movement for every day, it looks like this. Many candles coming before, many candles coming afterwards, and when you look onto it from this perspective and from just zoom it out and look onto it, this is called a price chart. So price chart is basically price history of any stock plotted upon on a piece of paper or on a piece of graph. That's a price chart in very simple terms. There's nothing into it. You plot up each day movement and it gives you insights. Like, that's wonderful, right? Now, what are those insights? Before that, let me understand you the structure more. You now know that each candle represents a movement for a particular day, but it's not just daily. You can change up that. You can see instead of daily, you can go to weekly. Instead of weekly, you can go to monthly, semi-annually, annually, and you can change up the period. Currently, if you see here, there is D. This D is basically daily movement. Now you can change it to weekly also. Then now, when you see this weekly is basically, let me first rub this off. So now you see up this weekly. Now this weekly is telling you price movement for the week. So starting from Monday till Friday, what was the price movement? If you look onto this last week movement, what is now this telling you? Or let me take another example. If you look onto this candle, what is this telling you? A green candle simply means that the price closed higher than what it opened up. Okay, the price closed higher of what it opened up, and a red candle is indicating that the price closed below of what it opened. So here, if it is green and if it is closing above, then this would have been the open. So at 9:15, this would have been the price at which the stock opened upon. This top side is the close part. The price closed here, and that's why it's green. Okay. you can see here small line coming outside of this candle. Okay, or if you look onto this one, this is a long line coming onto here, long line coming onto here. So this is more of intraday movements. So one is open, close. Let me draw it more so that you can see. If this is green, so this will be open, okay, and this is close. Now if you see some wicks here, this is called as wicks. The lines that coming through the candle, this is called as wick. Okay, what is this signifying you? That the price opened up here, that's fixed, this is open. Now it would have went down this much in intraday movements. Okay, so the market opens 9:15, closes 3:30. There is a lot of upward, downward movements, and there is one open and close. So these four information can be interpreted from any candle. So this was the day's low. You can say it as day's low, and this is day's high. Got it? Day high, day low, open and close. And if this would have been a red candle, then there is not much change. Intraday movements remain the same. But this open and close will now differ, because the price went down. So this would have been open. So 9:50 the stock opened very positively. Then on the intraday it went up few points higher to that price also. That's why you can see a wick of this here. It went up to this point in the low, but it didn't close upon. It moved again up and it closed upon here. So this is for a red candle. Okay, open, close, day low, day high. This information is by seeing any candle. And since we are doing this currently on weekly, so this is week open, close, week's low and week's high. Got it? Similarly, you can change up the time frame. So this is called as time frame of a stock chart. And all these time frames have different significance. Okay. Now, instead of that daily, we saw weekly, there is monthly also. You can see monthly also. First of all, let me remove of this. So this is like now monthly movement. This current month going on, this is previous month. This is May 2020, this is April 2020. So now this is a month, open, close, low and high. Got my point? And when you plot up many months before, many months on a chart, when you plot up many days on a chart, days movement on a chart, and look onto it, just look onto it, it's like giving you an insight that over the period, how is the price moving? How is the price moving from wherever you are seeing? So we are seeing it from 2009. So from 2009 till 2020, how is the price moving on a monthly basis? Now this can be as low as 1 second also. Okay, this can be as low as 1 second also. So you want to see chart movements of 1 second? Okay, this is available to premium, so you can't do it. You can do, I think, for minutes, you can do for 15 minutes, you will be seeing. So this is now 15-minute movement. Every 15-minute movement gets plotted onto it. Okay. Now what to do? There are many different type of time frames on which time frame you should analyze. See, before analyzing up any stock or before analyzing up any chart, it is very important that you decide the time frame first. Because if your time frame is wrong, your analysis can be wrong. I'll tell you why it can happen, because each time frame has some significance. Like, if you want to do something intraday, when I say intraday, it simply means that you buy up and sell up within the same trading session. So you're buying at around 10 a.m., you sold it again back at 10:15, or you're buying at 10 and you're squaring up for 10:1, or maybe 2:25, 2 to 2:30. Whatever buying and selling you are doing on the same day, it is called as intraday. Okay, so for intraday you can't see up daily prices, because you need to close your position within the same session. Like, that sounds logical, right? If you see daily, how will you able to work on minute to minute basis? Because in intraday you are basically buying any trade for particular minutes or for particular hours, for 1 hour, 2 hour, or for 10 minutes, 20 minutes only. So if your objective is to make profit on 10-minute movement, then you need to see 10-minute chart or 15-minute chart at some smaller period chart. So if you want to hold it for a smaller period chart. If you want to hold it for a longer period, then you require longer period chart. But if you look onto the wrong chart, okay, you want to hold it for long, but if you're looking at 15-minute charts, then your entire analysis will be wrong then. So whenever you're opening chart, first thing, selection of stock, it is very obvious. Second, deciding of the time frame, that what's the time frame. So let me tell you on what time frame I work. So I am not an intraday trader. I don't do anything with futures and options. Also, I don't do anything within the same day. I am into mid-term investing, and when I say mid-term investing, you need to hold it at least for 2 months, 3 months to have some good profits. So I'm not kind of positional who buy today, sell tomorrow, or buy today and sell after 2 days. I don't do that kind of thing. So I don't have any relevance for seeing up 15 minutes or 20 minutes. What's of my relevance then? My relevance is more towards daily, weekly charts. Though I also look onto the monthly charts also, because if something is very good in monthly charts, the weekly charts will be good, and eventually the daily chart will also good. So it depends. Sometimes I just work on weekly and daily. Sometimes I see monthly and weekly also, both. So that's my time horizon. So my time horizon is comparatively long. It's not for a short period. So 15 minutes is of no relevance to me. So if you want to do something intraday, then that shorter duration is for you. But let me again go to weekly charts, because that's where I start my journey of understanding a stock. Candle is basically derived from Japanese. Okay, this is called as Japanese candlestick. Okay, we'll not go into derivation because that's actually of not much relevance. Whoever derived it, it's okay, it's very commendable thing, but now it's important to understand how to interpret it. Okay. Similarly, if you are looking onto this, there are different type of charts. Okay, you can see line chart also here. You can see hollow candles also here. These are again all are same things. Okay, all are telling you the same thing. Price movements. The shape is changing. The shape is changing. I usually work with candles and bars. So this is like bar. Again, this is same. If it is red, what would have been the opening in this case? What would have been the opening in this case? Come on now, you can answer upon. It's very simple. Nothing that tough. No rocket science. The opening would have been this. If it is red, it simply means that your closing was below your opening. The day ended in negative. Negative simply means that the price fell down from whatever it opened upon. So it opened here, it closed up here, and in intraday it went upon to this level 65,360. So in intraday it went up here and that, but it went up again up. So there would be certain buyers that think that now I should buy it. So they again came into force of buying and the stock closed higher. So now you understand what are bars, what are candles. Okay, price movements plotted on graph together for a period. Now, what are these? As I told you that there are various participants, right? And all these participants, whatever their analysis is, okay, whatever they are analyzing about any company, at the end they either buy or they either sell. And that is the trick. You can see of that from this volumes, that whether buyers are in force or sellers are in force. Price and volume together gives you all the details about what market is thinking about any stock. That's the holy grail of a technical analysis, that price and volume action gives you all the insight about a stock. What are people thinking about a stock? And I don't have my opinion. I just follow up them. I need to follow what mass are thinking. So these are volumes. Volume means how many shares are traded on a particular day. What's the trading volume into any share? And it is of very importance because it tells you who were in force. For example, in this case the price felt upon, right, in this bar, and there was good volumes onto it. So this is telling you now that supply is more prevalent into it. If you look onto this, see, there were huge buying, there were good volume, huge volumes. So huge volumes are good, that means many people are now buying it, right? So understanding price and volume together is of huge importance. That I'll again tell you when we'll understand about trends going forward, but let me first tell you about some indicators. So you might be thinking about a lot of indicators you would have heard. You would have heard about RSI, you would have heard about Bollinger Bands, or you would have heard about moving averages, or there can be like more than 300 indicators. But let me tell you one truth about every indicator and what should be your expectation with regard to any indicator. Understand that all these indicators at the end get derived, okay? It's not something that's coming on magically, right? Something and some logic has to be there before every indicator. And what's that logic? The main thing in that logic is the price itself, how the price is moving. So every indicator gets derived from price itself. Okay, so price is the first source of understanding, and all these indicators are add-ons. Like if you understand the price volume itself, you don't need any indicator. I'll tell you in some indicator that I use, but apart from that, you don't need any indicator if you understand the price and volumes, because eventually everything is getting derived from these two only. So when I am getting an information upfront, why I should be referring to some indicator? Or those will be lagging. Eventually, if you'll ask me, those all are lagging. The price will move first, and then all these indicators will shape up according to that. So price is leading and indicators are always lagging. So many people use it, but let me tell you one more thing. Indicators are useful when you are doing something intraday. It helps you in a faster decision making. So in intraday, you will find some intraday people using up like 5 indicators, RSI, Bollinger Bands, this, that. I seriously don't have any clue about it, because that's not my time frame. I don't have to do anything intraday. I need to work on weekly and monthly, daily. And for this, you don't need that indicators. Got it? Because you are actually giving some time for your stock to perform. You're not on to like move now, move today itself, move in 5 minutes itself. No, you give it certain time. Okay, patience is the key here. So these are volumes and indicators. How can you add up indicators? So you can see this indicator and you can add up like moving average. So you can click onto it. Now it comes onto here. Okay, you can click onto this settings and change onto it. What I use few moving averages. So what are moving averages? I'll tell you that in a moment, but before that, let me tell you what all the moving averages that I use. So I use 3 moving averages primarily that helps me in decision making. Let us go back to daily. So currently it's 200. Okay, so this is 200 day moving average. That's very important moving average. Why? Because it tells you the long-term trend of any stock. Okay. Second moving average that I use, can add up here again onto moving average. It gets added up here. Change that to 50. Okay, you can also change the color. Third that I use is, okay, I can only use 2 into this. I have a different charting tool. This is for free. So currently, let me take you to 2 more important, that is 210. So 200 gives you a long term, that what's the long term trend of a stock, and 10 moving average gives you the shorter term trend of the stock. Now understand that we are currently on daily time frame. Okay, if you put this on weekly, you need to be careful. Why? Because on weekly, if I am putting 200, then it is simply doing 200 weeks. Okay, so 200 day moving average line, if I have to put it on weekly, what I have to do? I have to simply do 200 divided by 5, because in a week there is 5 trading day. So I do 200 by 5, it is 40. So 200 day on daily, like if I have to change this from daily to weekly, now this is 200 week moving average, this blue line. I don't want 200 week, I want 200 day. 200 day is 40 week now, 200 divided by 5. So this is now the long term moving average. And for 10 is simply now 2. Okay, this is now 2 week. Got it? So one gives you a long term understanding and another gives you a short term. In monthly I don't use any moving average because that's already like very few bars and candles are there. So these are the two moving averages. Now few other popular indicators are RSI. You can also put that from here. RSI strategy, relative strength index, this one, relative strength index, and Bollinger Band. Though I don't know much about Bollinger Bands, RSI simply is telling you price strength. Price strength, if it's telling you price strength, it itself derived from price. So we'll not discuss about that, but yeah, there are a lot of indicators that you can see upon here. A ninja tip from my side is that the less indicators you will use, the more and the better performance you will be able to do it, because you will not get confused. Otherwise you will just get confused on seeing this indicators, and eventually they'll hamper up your growth. See, understand, you need to keep it simple, you need to keep it clean. So this is now very clean, there is not much noise into it. The more indicator you will put, the more noise it comes within it. In stock markets, always simplicity will be working, complexity will not working. But just a tip for you is that human mind likes complexity. Okay, understand this, human minds always likes complexity. He can't accept simple things. If you give a human being some simple thing, he'll be like, no, there's something wrong, there has to be something wrong, it can't be simple. A normal thinking, your normal thinking, whatever has been from your life, if you'll apply that here, you'll simply lose up. Because this is understanding mass psychology, you have never done that in past. So don't try to find up your life logics into here, because it will not be into it. In technical analysis, you are basically following market's opinion. Now you understand that. But in life, you never follow anybody's opinion. Oh, come on, hell, somebody gives you an opinion, you will give him 5 different opinions about you. So nobody likes to accept somebody else's opinion into their life. Okay, your opinion, okay, I have my opinion. But in technical analysis, not the case. You're getting my point? You are following others' opinion. You don't make an opinion. You just react on to others' opinion. But in your normal life, you don't do it. So that's why whenever you are into technical analysis, you need to leave your mind from your childhood till date. That whatever things you have learned, a bit separate, and then operate it separately. Because if you relate it to your life, you will find various things that are contradictory. Okay, so we are getting towards mindset part, but yeah, that might help you. So I thought it to telling you, but that's different mindset side. Now we have discussed about what are price charts, what are bars, what are candles, moving averages. Now let us go to the third part of the video. I hope you are getting and understanding this video. If that's the case, please do leave your ideas and your queries into the comment box so that I can understand whether you are liking up the video or not. Got it? Now, let us understand the third part. The third part is identification of trends. You might have heard here and there, market is uptrending, market is in downward trend, market is in upward trend. Now, how to derive of that? So we'll look now onto that. So I told you about moving averages, right? Now understand what's the importance of moving average. Apart from that, it tells you a long-term direction and a short-term direction depending upon what moving averages duration you are taking. So you can change the duration from here. You want 40 week, you can do 40 week, 10 week, 10 week. Let us go again to daily. And let me change this back to 200. You need to change it every time if you are changing the time frame in this trading view. Otherwise, it doesn't get changed by itself. So currently I am taking only 200 day. Now, see, any stock has volatility. Understand? When I say volatility, it simply means that the price moves up and down. Okay, it doesn't be there itself, because there are various participants. At some moment, someone majority thinking that it's good, some information came, then they start thinking that it's bad. So there are a lot of people into it, and whenever there are a lot of participants, there has to be some volatility, because people will have different sort of opinions, right? Now it's difficult to see just the price and tell what's the trend, right? Let me hide this for a moment and ask you, oh, what's the trend here? Though you can look onto it and say that, okay, there is actually a downward trend, but moving averages tells you and good deep insight. How? What are moving averages? Moving averages are basically smoothing up the price movements. So when we say 200 days, so it's basically doing last 200-day average. So at any point on this moving averages, for example, I am at this point in this moving averages, I am at this point in moving averages. So how this point gets derived? It's like past 200 days simple average. Price, whatever the price is for each day, for the last 200 days, it does an average of it. So every day do an average at the end. And this is how this line is just full of dots. And then it gets connected. You're getting my point? So moving averages is smoothing up your price. And when it's smoothing up your price, it gives you a direction. How? See now this. Okay. For example, we are currently here. Okay. Now, what is this moving average telling you? See, look onto this moving average. This moving average is like going up, right? That is telling you the price is an uptrend. This is how trending and non-trending get decided upon. One way is to use moving average. I'll tell you other way also. Just like this is not just the only way, but moving averages can also be used. So now here, from here, the moving average is like declining, right? So if it's declining, it simply means that the price is in downtrend. So this is downtrend, this is uptrend. Again, this is like in continuously the prices is moving up, right? So this is again uptrend, and here the prices are falling, so it's downtrend. Now what you can understand from this chart? Uptrend, downtrend, uptrend, downtrend. Yeah, you are smart enough now. Tell me, write down in the comment box right now. Pause the video and write now, what do you think about this now? You can now interpret that any chart has phases. Phases of uptrend, then again a downtrend will come. Uptrend, then again downtrend will come. In between those uptrend and downtrend, there are no trends. Yes, right. If you ask me here, if you look onto this, let me put a box here so that it's easy for you to understand. If you look onto this area, this is no trending area. There are no trends. Moving averages are basically flat. The price is moving in a range. So it's moving in this range. It's moving in this range. Up and down, up and down, up and down. So this is a non-trending, right? Then it's again start moving up. So this is uptrending. So stock has always uptrending sideways, downward, uptrending sideways, downward. These three things keep on occurring onto every stock at some moment. You can see it on any chart. Currently we are doing on MRF. Homework for you is that you can look onto any chart. You will find up this. Okay. Now, what is following trend means? What does following trend means? Following trend simply means whoever is strong be onto that side. So here uptrend is strong. That simply means that there are more buyers. More people want to buy it. Be with them. Be with them because people are right. Majority of people are right. Why do you want to argue with it? Just be with them and earn money. Simple enough? Yeah, actually it's simple. Other way, if the price is falling right here, If you can see, the price is falling. Now who is in more force? Sellers are into more force now. And if sellers are more force, what does technical analysis say? Technical analysis say that follow them. Don't buy now. It's time to sell a stock. To sell a stock so that you can earn. This is called trend following. If you want, I can take quick another chart. Which chart do you want me to take? Okay, I know you can't reply on video back. So let me take up, let's take Balkrishna Industries. Now, look on to daily. Just like in daily, you can see it on weekly also. There is no problem with it. So, when I told you with regard to what? Moving average, let us do with other way. Other way to look on to whether the trend is upwards or downwards is simply, first of all, observe this. Once you observe this, you will understand it. It's not that hard. It's simple, and that's the problem. I'm telling you upfront, this is simple, and that's the problem with it. People don't like simple things. You can't simply accept it. You want more. So give me some indicator, give me some indicator. I'm telling you, every indicator get derived from price. You can check it by yourself, but still, I'm pretty sure you will again hunt for indicators. Okay. Now, if you look onto this, if you close on to moving averages also, okay, let us hide moving averages also. Now, whether it's in uptrend or not, how you can tell that? See onto it, whenever the price is moving up, it moves higher. Okay, like here, price moved up like this. Let me put arrows. Price moved up first like this, then it moved like this. But now when it moved back, it moved higher. Okay, when it moved down, it went to low, but it didn't cross this low. Right, it didn't cross up this low. It didn't break that. The price never fell below that. Again it went up above that. So this was the previous level, it went up above that. It again went down, then it again went up. It went down, it went up. It went down, it went up. It went down here, then again it went up here. It went down here, again it went up here, again high. Okay. It went down here, it went up here. So this low was also not breaking up this, right? But now when it failed, it made a new low, breaking up the previous lows. Now what is this called? What is this called? Let us be more simple. This is all higher high. All the high that the stock is making is higher than the previous one. That is higher than previous high, called as higher high. Simple enough. Higher high, higher high, here also higher high, here also higher high, here also higher high. Now what will be called as the lower point? Higher lows, because each low is high from the previous lows. So higher low is again higher low, higher low, higher low, higher low. Now if you look onto this, this also never braked up on this. It again went up back, higher low, because this was the previous low, this is the new low. Again higher, higher, here. The trend changed from here, because now it made a lower low. So when it's making a lower low, the trend has now changed. Okay, until in time it was going on higher high, it was, all things were fine. But when it's making a lower low, the trend has now changed. And you can look on to what happened after that. Look on to what happened after that. Okay, this will get erased upon. After this point, the stock, so we were here. Here it broke that. Okay, it made a lower low. Now if you look onto this again, it again rallied up, but it was never a higher low. Okay, it was never a higher low. It was again a lower. Let me erase this. It was lower high. Now if you look onto this, what's happening? Let me again draw you. It went up here, it tried to rally it, felt upon, it went up here, breaking up this low. Okay, it now broke up this low, new low made. It again went back, but never to this levels. Okay, it never went to this levels. Lower, high. Then it again went down. If you're watching it very closely, this was the previous low, this was again a new low. So lower low compared to this one, lower low, and compared to this one, again lower low. Now look on to, now the trend got changed. How? Because now it again went back and it just went up above this point. You're understanding it? So it went up again this point, this was now a higher high. Compared to this, it made a higher high. So the trend is now again uptrend. So one way is seeing up the moving averages. Those can also tell you whether it is trending up, down or sideways, and that box that we made upon. Another way is like this. Uptrend, higher highs, lower highs. Sorry. Uptrend, higher highs and higher lows. Downtrend, there will be lower lows and lower highs. Okay, this is also called as dose theory. So dose theory is like this, that the price moves up in a zigzag fashion. And now you can look onto it, what happened after that. Again high, it went up, down, it's again up. So now the chart is progressing. Now trend following is simply following what side is prominent. Okay, so if buyers are prominent, you need to follow them. If sellers are prominent, you need to follow up them. No arguments. So that's trend following. So this was now the third part of the video. That what are uptrends, what are downtrends, what are sideways. We have more to go. Now I know there's like too much, but yeah, I need to give you some more insights about how to interpret these charts, and that will be a advanced level. Okay, so till now if you have understood everything, you are now moving on to the advanced side, and I hope you are liking up this master class. So don't forget, subscribe and hit the bell icon, okay, so that I can bring some more master classes exclusively for you guys. Now let us go to the fourth part, and the fourth part is very interesting. This is again what I do. Okay, so the fourth part is how to know the story behind the stock. We understood it's moving up and moving down, but what's the story? Tell me the story. This is not enough for me. I want to know the story. Got it? So let us go through the story now. See, understand one thing. Every chart speaks. It speaks about the trend, and also it speaks a lot about business. How? Because I told you in the beginning that this is mass psychology. We are just interpreting up mass psychology. And if mass thinks that business is good, eventually they'll buy, price will move up. So if the price is moving up, you can conclude that the business is good. Got my point? Got my point? That's technical analysis. That's now most advanced side of technical analysis, and it is also called as reading up of charts. And for reading up of charts, it takes immense time. So it took me years to reach up to this point and then understand how to read them, how to read about business just by looking onto chart. Doesn't it sound super good? Are you guys super excited to know that? Are you guys super excited to know that? Come on, you need to be energetic. This is very crucial, and you can't be lazy right now. Okay, now I'll take you through some charts. See to those charts in a very deep manner, and I'll tell you just by looking onto it what will be going on into that business. Magic, right? No, it's not magic. It's very simple understanding of human behavior. Let us go through that. Let me open chart of example. Let us take Dalmia sugar. Okay. Let me take weekly. Okay. So for reading up it for the business, you should be going on to weekly. Okay. Don't go on to daily chart because you need a lot of history to read upon. Okay, it's not that just for one day or 1 week you will see the movement and you will tell it. No, you need a bigger picture. Okay, so whenever I start analyzing a company, I start with the bigger picture. Okay, let me zoom out from that chart and see what's going on with the company. And if I feel good that company is going on good, I do check up on the business also. So this is called techno fundamentals, in which you see the technicals also and you see the fundamentals also. That is simply the best of both worlds. You have your opinions, fundamental analysis, got market's opinion also on your side. So when two things together are with you, your opinion and market's opinion are in sync, you are bound. You can write this down. You are bound to make money. It doesn't happen that you can't make money if you are working good, if you are working in sync with market and your opinions and market's opinion are together. There is no chance that you will lose money. Yeah, I can say that. There is no chance. Losing about money always comes when either you have some stories of your mind and you just lost into those stories. I think this, I think that, I think this. Oh, come on. Keep your opinion aside. Look on to what others are also thinking. You are not a perfect person. Okay, you are not some like super expert or some extraordinary person like Albert Einstein. Don't take this otherwise. I am not that intelligent. I'm not that intelligent of Albert Einstein. So here I am to make money, right? I'm not here to fight with someone. I'm not here to prove that no, I am wrong, market, you are wrong, market, I am right. I am right, you are wrong. And what I'll do by doing it? I don't have to do that because I am here to make money. What I'll do fighting with the screen? What do I do with fighting with the screen? Nobody is not even listening. Market is not even listening. To be true, you are actually fighting with yourself. Your opinion, market opinion, fighting. Don't fight, be in sync. This is how you need to be in sync now. Look onto the weekly charts first and see what weekly charts are telling you. Let me open some. Okay, let's see Balrampur Chini. Now see, we have a good history of from 2005-6. So I always look onto last 10-15 years for knowing onto what's the story behind it. Now, what can you tell about the trend which we learned in the part 3? What can you tell about the trends into this? Absolutely, there are trends, but these trends are very short, right? Just moved up for what? 1 year, then again back up here, then again it moved up for 5-6 months, then again back here for 1 year, again moved up, down. It keeps going like that way, right? It is like keep going up and down, no particular direction. So now when I see such stock that actually doesn't have any direction from last 10-15 years, it simply tells me that how the business would be. Now what would be the business of this? No, I'm not telling Balrampur Chini make sugar. You don't know even to know about what are the products. Okay, I don't even have to know about the products. Though I look onto that I'll tell you in the later part when we will conclude this video. But here if you see any chart like this, you can say that the business has some fundamental problems. Okay, fundamental problems. What would be that fundamental problems? That I can tell you with my experience that what are those problems. First problem will be highly volatile profits. Whenever you see a chart like this just going up and down, nothing is happening, there is volatility with regards to business. When I say business, eventually it goes to the profit itself, right? So there is problem with profit. The profits are not consistently. Profits are not predictable. You can't predict them. They are very volatile. In few years it's up, that's why the price is eventually up. Few years it's down, the price is down, again profit is up, then down, again up, down. So the price will mirror up business. Price charts always mirror up a business. And that's why when price is falling, you can reversely interpret that there is something wrong with the business itself. Right? Because that's not something that I'm telling you out of the world. It's very simple if you look onto that way. Price charts tell you about business. Right? So if price is falling, it tells you that there is some problem with business. price is moving up, it's telling you there's something good with business. But this tells you volatility, that the profit is very volatile, and price eventually at the end moves up with profits. That's not like for every quarter it will match up, but over a period, if you'll say 5 year of period, 6 years of period, price growth and share price growth will match up. Now what happens with these companies, like for example the current one that we are taking of sugar, there is no price growth. If we started from, for example, 50 crore profit right now, we moved up next year to 60, we again are back next year to 45, we are again back to 50. So 4 years profit is 50 to 50. So price will have to eventually come back there. This is the problem which people don't understand about companies. That if there is high volatility, that you can see from the chart itself, that the price is high volatile, you can conclude that the profit will be volatile and eventually price will chase up profit. And how do I know that? That's not my opinion. Fundamental analysis tells you that. So now comes the interesting part of what I do. One part till now we discussed technical analysis. Another part is I also go into the fundamentals. That how are the fundamentals of company. The best way to understand what fundamentals are good and what fundamentals are bad is to understand history. See, come on, you can't ignore history. We have like 30-40 years of stock market history. You're saying that, oh, I'll not look onto it. I'll start from today, I'll buy. What? Come on. It gives you so much insight. So much insight of what worked, what did not work. And it's always the same. This is again a myth that this time it's different. It's never different. Human behavior has been same with regard to money, with regard to stock markets. 20 years before, or I would say US stock market history is 100 years. 100 years before also, there was the same ratios, current ratio, debt to equity ratio. Today is also the same ratio. The interpretation of those ratios 100 years back also was the same, and today the interpretation is also the same. So if the interpretation is same, the way to analyze business is same, it's not changed, right? So when you know about those things, what worked, what didn't work, then you will be having a very good stock selection. So this helps in stock selection, and that's my secret which I am giving to you guys. That's my secret. When you mix up fundamentals with the technicals, it highly improves your chances of winning. It's like I can write on a paper and tell you over the period you will not lose money. If you are doing stock selection good, and provided there is one condition, that you have your risk management principles in place. Okay, because you will not be right every time. Again a myth that I would like to clear. Only and only stock market, okay, only stock market is correct 100% of the time. You write it down with bold letters right now. Only stock market is right 100% of the time. We all are just participants. We all are just participants into that big market. Understand? So we cannot be right 100% of the time. It's not possible. It's impossible. Yes, it's impossible. It's not like I am just saying that it is not like somebody in the world can do it. Nobody in the world can do it. Because you are not the market. You are a participant in the market. And since you are just a part of a bigger circle, you can be wrong. It's absolutely right to be wrong. There is no harm with regard to it. Okay. So when you are wrong, you need to know how and what's my plan with exiting that stock. And that's where your risk management place will come. So if you follow up all the fundamental thing, that you don't buy bad fundamental companies. So the chart is saying that it's an uptrend, but fundamentally the company is bad. And how you will understand company is bad? By understanding history, by understanding those ratios, by understanding what all the multi-bagger companies that were into the past. In short, understand the multi-bagger characteristics of those companies and understand the technical characteristics of those companies that created wealth in history. Once you understood these both things, you need to simply apply it to the current set. Bank, money is on the table. Yes, money is on the table. So that was the complete masterclass. I hope you would have enjoyed this masterclass and it would have given you a lot of learning, but learning never stops. Now, you would have understood that there are a lot of things that you need to understand and that you need to learn, like how to find the exact entry points. I told you about patterns, but there are different patterns. How to identify it, how to unlearn the psychology behind those patterns, how to execute a particular investment idea, when to exit, the risk management principles, how to do the sector analysis, because do you know this, that half of your work is done if you are in the right sector. So how to screen up the stocks, how to pick them within the right sector so that it can maximize your profit. So if you want to go into all those details and learn all those things, here's an opportunity for you. An opportunity that can give you an add-on advantage as you start into stock markets, because those all things are proven from the 6 years of my experience. An opportunity that can save years of your time in doing trial and errors with your real money. Now understand this, money always likes serious people. If you're not serious to your money, don't expect that the money will be serious to you. The money will eventually leave you off brutally. The opportunity is Power Investing Training Program, which will give you all the weapons and all the insights to be ready in the world of stocks and to maximize your profits. If you want to know the details of the program, you can also write in the comment that I want to know the details, or else you can go to our website and drop your number or contact us on our WhatsApp number. Also, if you like this video, don't forget to press the subscribe button and hit the bell icon. And there's more for you. If you want more stock specific insights, sector analysis, all this for free, then do follow our Telegram handle, that is @EquiAlpha, because we share all the stock specific actions and analysis on a constant day-to-day basis on our Twitter handle and in the Telegram channel. So see you guys again in the next masterclass. Goodbye, happy learning.